window.
Hello, traders. Gary Wagner here. It is Friday, finally, the 29th day of July. It's approximately 7:30 a.m. in Honolulu, Hawaii, and this is the Daily Report for Gold, our weekend review. And what a week we have seen in the market. Gold is currently trading higher. It's up a couple of dollars, I believe up about $5 or $6, currently trading around $16.27. That's correct, $16.27, just off our new record high, but we've made quite a few of them this week alone. For that reason, I'm going to start with our weekly chart so that we can take a really strong look at the market itself. As you can see, over the last 4 weeks, we have had solid green up candles. This is a standard candlestick chart. And you can see that although it doesn't compete with the range that we saw back a couple of weeks ago, for example, when we saw the market move from 1480 well above 15 to about 1540, the following week it goes from about 1540 and just closes shy of 1600, right around 1590. It would be this week that we saw some real historical grand standing in terms of the crisis in the U.S. regarding our debt ceiling. Major grandstanding as far as I'm concerned. And because of that, we see what kind of result it has had on gold and the precious metals complex. You know, with the continuing concern right now about the uncertainty about the U.S. deficit and our deficit ceiling and the U.S. budget, that has really prompted the precious metals to go on a tear. It's a flight to quality. It's the safe haven investment. It's the go-to investment in times of uncertainty. And there is no doubt that there is some uncertainty in the air. When we take a look at the trading activity on a short-term basis, I want to start with our 240-minute chart today. This, of course, we're going to start. It's in Henkin format, which, of course, is a Japanese average chart. And what we can see is that really the best way to describe the recent activity of the market, what I'm talking about is really this week itself, we can say that it's been best characterized with very short corrections and market consolidations that have been followed by higher prices. And what is clear to me is that, of course, this is the major move that we saw at the beginning of the month. And as I said, we saw it go from about 1470 all the way up to about 1600. This is the first print right in here of 1600. And you can see that it hit 1600. The market went and corrected. The second stab, it wasn't able to take it out. Then we had a set of new high prices. And then today again, we have some new record highs in the market. It's very clear that gold has been on an upward move. It's very clear, at least as far as I'm concerned, that we have seen a game changer in the marketplace itself. Traders, we're looking at 1600 plus gold this morning. Traders, we're looking at a 360-minute standard candlestick chart right now. And this, of course, is the chart we have been using for our current Elliott wave count. It is our belief that we are in a intermediate fifth wave right here. In terms of the minor count, I've gone ahead, I've put one in. I'm not sure how I'm going to label this because even though we had a 23% correction, and this is that first high right around 1610, the market comes down, tests 1580, I'm not really convinced that that would be a 2. Given the duration, the time that it took, it simply is probably within our minor count itself a subcount, possibly, But I don't think that we are really out of wave one within this minor count. The subcount probably, but not the minor count itself. As I say, this is an unusual circumstance. This is an unusual market, and it's certainly benefiting us as traders. And traders, for our last chart of the day, we'll look at our daily chart. And on our daily chart, as you can see, I have labeled this 2, but I'm not convinced that I'm going to keep this, that this was 2 and that we are now in 3. But it is one possible count. As I said, what's important right now is where we place our stops and where our targets themselves are. And from my way of thinking, my original belief that our target right now, 1641 to 1647, my belief is that that is absolutely still in play. Now, when we go ahead and convert this chart to our Henkin chart to get an idea of the strength of the trend, because primarily that's what I do with the Henkin Ashi, is I'm simply looking at the strength of the trend. It gives us a slightly different picture. You can see that really since the beginning of July, we have had nothing on our daily charts but green candles. A phenomenal move. We've also seen that as the market consolidated, it consolidated with smaller body green candles, but at no point this month has it gone red. The closest we've seen is this almost doji-like candle we saw when the market retraced just the other day, but we are back to green. However, at the same time, you notice that over the last couple of days, we have seen these lower tails form. The body size has shrunk, and that's indicative of a uptrend. However, an uptrend that doesn't have a lot of momentum behind it. It is going uphill, and as we get into this new territory, 1600, it's quite a steep hill at best. Because of that, you notice that it is not moving in the same manner that it did in the beginning of the month. Nonetheless, maintain your long position at 1547. Maintain any of the add-ons that you have acquired as we have watched this market move up. And lastly, let's maintain our stops at 1590. It seems to have been able to protect us. We never really saw it go close. This was a 1602 print that we saw yesterday. Traders, this has been Gary Wagner wishing you as always good trading, and we're certainly getting it this month. We'll talk to you on Monday for another daily update and review. Bye-bye.